GETCRACK. Wake up, motherfucker.
Cooper joins us here in Studio 2, Chief Global Market Strategist over at Invesco. An eye on today and, of course, an eye on 2025. We've been talking a lot about that, Christina, and I am curious about kind of the biggest risk that investors should kind of keep their eye on as we head into, or I should say, out of a record year in 2024. I mean, I don't want to jinx it. I know we still got a month to go, but most people think this is going to be a record year and we're going to possibly have a record 2025. What's the risk, though?
So I think there are actually a few key risks. One, of course, is the resurgence of inflation. And that can certainly be fanned by pro-growth policies. That can also be fanned by a very, very restrictive immigration policy that shrinks the labor pool. It can also be fanned by, for example, tariffs if they're applied for a significant period of time, and especially if they're quite large. The other risk I would point to is the potential for a Liz Truss moment. The idea that we are finally hitting that breaking point where bond vigilantism comes and drives up yields because there are not as many willing Treasury buyers out there. And I think that is a real risk. 2024 was our first year in which the line item in government spending for servicing our debt was larger than our entire defense budget. That's not sustainable over the longer term. And I think we're seeing greater fears. We've seen the 10-year yield go up because of a variety of factors, but I would say one of them is because of concerns about a lack of fiscal prudence.
Yeah, and it seems like most of the mainstream economists, when they're kind of assessing some of the policy proposals, if they were to be implemented, those debt levels and those deficit levels are certainly going to rise. The question is there not the potential for some equilibrium that even as the government's balance sheet maybe weakens a little bit, if there is a net positive effect on the economy and ostensibly the stock market, should investors be comfortable with that?
I think they should. I think this argues for diversification. I think all the uncertainty we see looking out is certainly significant, but there are also very significant opportunities. And so the best approach, in my opinion, the most prudent, is to be well diversified, both across and within the three major asset classes. That way we can protect against or hedge against some of the biggest risks and also take advantage of a variety of different opportunities presented by this environment.
Liz Truss moment was interesting because I keep reading more and more about how the cost of leverage is now increasing as swap spreads fall because the back end of the curve keeps kind of rising and staying sticky, and that the funding, like the pipes, aren't going to work as well. When you take a look at it in terms of the catalyst then, what do you think is going to be that moment, and how do you sort of trade that?
Well, it's hard to see how that moment comes. I think what we're seeing now is, hey, here are some yellow flags. These are things that investors are worried about. But it could very well go in a different direction. Certainly if we see more discipline when it comes to fiscal spending in 2025, I think there's certainly a concern that a red sweep means that there won't be those controls. But if, for example, tax cuts are fully funded or almost entirely funded, I think that certainly takes down yields. I think that takes down the anxiety around this. I think we're a long ways away from a Liz Truss moment. This is an environment in which we have significant GDP growth. There's a lot going for this economy. There's a lot going for the government. I think investors just want to see signs that the government is going to be careful and do a little more to control spending.
So how does that affect the broadening out of the rally call that many have?
So I don't think it has a dramatic impact because I think in general what we're seeing is that financial conditions are easing, and that's supportive along with improvements in real wages. And that's a big part of our outlook for 2025 that's driving a reacceleration in the economy is that consumption improves because we see real incomes improving, real wages improving. And so from my perspective, I think we are going to see that rotation into cyclicals, into small caps. They are more sensitive to the economic cycle. And I think what we're going to see is a pretty strong reacceleration in the U.S. We're also going to see reaccelerations in the U.K., in the Eurozone, in Canada, the major developed economies. I think we also have the potential for a nice reacceleration in Japan, just given that those wage growth, what we've seen in wage growth is sustainable and could improve from here.
I'm curious, what's your advice to investors out there, to potential clients who look at the run-up that we've seen in the U.S. market they're concerned about valuations. They're concerned about chasing a rally. And they say, is there anything outside the U.S. borders? Or is this primarily going to be 2025 a U.S. market story?
Well, I think there is legitimate concern. Valuations are stretched in the U.S. But if we dive down, valuations are not very high when it comes to small caps and when it comes to cyclicals. So, a rotation of some degree within one's U.S. allocation makes sense. And then abroad, there is a lot of opportunity. UK equities, very low PE ratios, high dividend yields. I think there's the potential for a nice reacceleration. Rate cuts should help there. Fed easing should be very supportive of emerging market equities and debt. So I think there's a lot of opportunity in areas where valuations are lower. I think as we enter the end of the year, this is a time to be rebalancing, taking profits, reallocating, redistributing. That doesn't mean walking away from tech and the mega caps, but it just means being better distributed.
What's that going to look like, though, for you? I feel like this year is going to be much crazier given the outsized gains that we've seen and how concentrated some of those gains are going to be. A lot of people are really going to have to rejigger their portfolios in a certain way.
Even modest rejiggering is going to help in terms of increasing exposure to small caps, taking some profits off the table. I think tech has long legs, but we're unlikely, in my opinion, to see tech outperform small caps and cyclicals in the near term. So just a small level of profit taking and rebalancing can make a significant impact on portfolios.
Christina, always a great conversation. Always great to have you here in studio. Christina Hooper, she's the Chief Global Market Strategist over at Invesco.
Phrase on the campaign trail was energy dominance. What does that really mean?
You know, I think for the Trump folks, that means maintaining our position as one of the world's largest, now the world's largest hydrocarbon producer and exporter, not fooling around with export restrictions like the Democrats have been doing. So maintaining that healthy, vibrant U.S. oil and gas sector and removing threats to it from climate regulations or anything else. The challenge for them, Manus, is that, you know, you can have a $30 or $40 crude oil price if you want to get rid of inflation. The president can't drive it there, but that can happen. Or you can have a thriving shale sector, but shale can't live at $30 or $40 crude. So there is a tension a bit, I think, between the idea that we need to drive energy prices lower. Again, the president can't do that. Only Saudi Arabia could do that by opening the taps near term. If that happened, it would hurt shale. We saw that movie. You and I saw it in 2020. Yep. And we will see it again.
But what capacity does America have to really ramp up? How much spare production capacity is there in U.S. oil?
0.0 million barrels a day. We haven't had spare production capacity since early 19...
So then then how do you get dominance? Is that deregulation just letting you square it for me? Because it doesn't make sense. If you've got 0.0 capacity and you want dominance, put the two together, because I can't do the math.
The only way you can do it is to dial 1-800-RIAD. The only option that any president has to quickly reduce oil supply, increase oil supply to reduce prices, is to call OPEC Plus leadership and successfully convince them to open the taps. I don't think that's going to happen here, but that's the only, believe me, I looked for the magic wand 20 years ago. That's the only option any president has to increase supply. The U.S.
Start with a big divergence in two pillars of the tech trade, software and semi-stocks, heading in different directions in this second half of the year. The IGV ETF up. It sounds like I give up, right? That's what it looks like.
You never give up.
I give up.
It's not what you do.
Up 22% since the start of July, while the SMH chip ETF has gotten crunched, down more than 6%. Top software names making major moves higher in that time: Oracle, ServiceNow, Salesforce, Snowflake, all up double digits, while big chip stocks continue to trade lower. Lam Research, AMAT, Micron, Qualcomm down 10% or more. So will the second half separation in tech continue into the year end? Let's get to that, but why don't we begin with your reflections on the fact that here we go again, another Dow record high, the S&P 5969, close to 6,000, then lead me to the tech.
No stopping it.
There's no stopping it.
Now, if I had told you, if I'd said Tyler Matheson, there's going to be a headline this week that Russia fired ICBMs into the Ukraine, what's going to happen to the market? And you'd be, well, if you had said it to me, I'd be like, well, the S&P's easily down 100 handles.
Yep.
The VIX is north of 25. Gold's up $100. 10-year yields are probably significantly lower on a flight to quality. None of that happened. So I guess if nothing else, that just shows you the resilience of the broader market and passive investing being first and foremost in everybody's mind. With all that said, I mean, you have to say at some point, things can get a little dicey here, given all the geopolitical risks out there and all the other things we're going to talk about later in the show.
Yeah, let's move on then to the question of this outperformance.
Yeah, the one guy didn't answer. You can say it, Tyler.
No, wait a second. Listen to how we led the show. Before we get into it, what are your thoughts on the market?
Okay, he's a little defensive, Tyler. I'm not.
You're not defensive.
And I'm happy to talk about this because I think we're going to maybe even talk about the underperformance of semis, although maybe this is that conversation right now. So it's partially because I think we've priced in so much good news that you had a day after on NVIDIA. In other words, stock finally did give up a little bit of ground.
NVIDIA was down today, right? Yeah, I didn't. There it is.
But I as we argued even yesterday, and I think even the 3.4% move today is something that, all things considered, the zoom into those numbers, the fact that I think they kind of downshifted successfully in terms of the guide. But software is moving because it is really seen as the next reverberation out. You throw a pebble in the water, guy, what happens?
You get ripple effect.
Okay, you get ripple effects, and that's really what I think is happening. No, but I mean,
the ripples go away.
The ripples go away eventually, and I think at some point what we've seen other times is software has actually followed semis, and I think that's happened again. I think software, ton of upgrades this week, but we heard it from everybody, from Snowflake, even Datadog, who I think 6% of their ARR is actually an AI customer base. Yet that base tripled in the last year. That's the kind of thing you do in software, and none of these valuations make sense. And we've talked about this with Palantir. I think it was 38 times forward sales, which is absurd. But the argument here is that if you're playing AI, you're playing it through the enablers, and software platforms have different ways to do it. And frankly, that's the way a lot of the consumers are reaching out, but more importantly, enterprise is happening right now. And I think it continues.
Bonawyn, thoughts on the broader market hitting new highs on the Dow, the S&P within a hair of 6,000, or pick up on Tim's thinking on the semis versus software?
So I'm going to be defensive and offensive.
Okay.
So I'm going to avoid the question first and then answer it second.
Very nice.
So in terms of the broader market, listen, I think we're in essentially an everything rally right now. Going into the NVIDIA print, I think a lot of us spoke about how we were a bit concerned about that. We'd like to see it perhaps trade a little flat or perhaps just be a bit more defensive in terms of posturing before going into that print. I think that kind of explains the move that we saw post earnings because it was yet another blowout quarter. I think questions about Blackwell supply and ability and back ordering and pull forward of ordering there, I think those concerns have been assuaged. And then in terms of the divergence between what we're seeing from SMH and I Give Up, is, a lot of those names. Let's take Salesforce, for example. The question was, and this is also with some of the hyperscalers, this AI-related CapEx spend needs to be justified. That was the prevailing wisdom at the time. And these companies were coming under pressure because investors really didn't feel like they had an accurate answer to that question. You saw Salesforce trade off, I don't know what it was, 25% post-earnings. And so a lot of those names had gotten beaten up coming into the print. And so that explains a bit of it. It's essentially you have like a star player like NVIDIA dragging up the rest of the balance. And so you've kind of been mired in that drag because, again, there's been a massive divergence between AI-related CapEx spend and then CapEx spend going forward.
What's up? It is, my time zone. I'm still November 23rd, 2024. Okay, gonna go into Sunday. So we start our Turkey Day week. And it's only about 3 days. The market will be open and a half day for Black Friday. So I think it's gonna be quiet. There shouldn't be any excitement going on outside of maybe crypto. That's about it. So chill out, relax. Hopefully I'll just spend most of the week trying to plan out how I'll do shows into December. Here, let me put up the banner. Here. So we're going to talk some stocks and donate to Porsche. Oh, yeah, we got this new commercial. I really like this commercial. Let me play it.
Feel like I should, feel like I should, feel like I should, feel like I should go. Go. feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should go. Feel like I should go. Feel like I should, feel like I should, feel like I should, feel like I should.
All right, so yeah, you can just hit the Cash App, get us some money here. You know, we always need the money. Well, if we could just put all the money in the stock market and Bitcoin and cryptos, all of the Dogecoin, yeah, you know. All right, so look at the ticker going scrolling around the banner. I added some more, updated it a bit. There were a lot of day trading opportunities all last week. I'm not a day trader. I only played a few of them just for fun if I had time. You have to be stuck on your computer for a while, I guess, if you were going to do that. But there were so many things moving last week. It was crazy. Like there were just opportunities everywhere. And I'm pretty sure I only saw a few of the opportunities, you know, out of the whole market. The market has thousands upon thousands of stocks, and crypto is adding more to it, right? You're going to have more and more assets to be trading alongside it. There's just too many, just way too many to keep track of. But hopefully, when I show you these things, it's like it clicks in your mind. That's why it's important to do your homework here. Here, let me put it up. Go to that link. And I gave you the PDFs and stuff way back when. And I'm going to remind you again to like do your homework. And then after that, like go back to those October streams where I gave a lot of details of what you should be looking for. And as we move into December, it's going to be more like I'm assuming you know some of the things I've already taught. And then I'll just start repeating things. A lot of this now is just repetition. Everything has to be repeated because that's how you learn. This is all pattern recognition. You as a human, when you see these patterns more and more and trade them, you get so comfortable. It's just like secondhand, you know. You just see like, oh, I see it here, go long. Oh, I see it here, go short. Boom, 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 boom. Because if you do it so well, that becomes second nature. You don't have to overthink things. Everything is just natural. You know, it has nothing to do with like what I think is what should happen or whatever. It's just like I see the chart, I just play it because I know this is like how much. And the problem with that is that it's very instinctual, you know. You don't really have a quantitative reasoning for it. And this is where I'm kind of trying to pivot, where is there a way for somehow AI to look at a chart and give you more of a statistical analysis, like say like, okay, if this pattern occurs or with this volume or this characteristic, what are the odds, right? They give you the odds and you can play it like poker then. But that's kind of more of a long-term thing. Like to get AI to have that intuitive feeling that a human has, it can't do it. But it can at least help you analyze things and take out all the grunt work, because there's so many stocks. Nobody has time to be doing that unless you really love looking at charts all day. Some people do. There's a lot of people that do just spend the weekend just looking over thousands of charts just to find good picks for the next week or potential plays. And then they go into the next week and they prepare and go like, okay, this stock I'm going to day trade, this stock I'm going to swing, this blah, blah, blah. They just do that. So, you know, we got these tools now, and I'm not an expert on it, but I think you younger guys, you know, like look at the video I just played with the commercial. Portia got AI working for her, and I know people are really interested in it. And I think whatever you learn from me, you can just take it to the next level and go ahead. I'm already out of the game. I'm just too lazy. I don't need to do that. But you guys just take whatever I did. I spent a long time distilling everything just to find the best ways to look at a chart, and once you got that level, it's easy street. All right. Let's go look at the homework here. Let's see, share screen. Let's see what your homework. Blah 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 blah. Okay, here it is. Okay, that's the link on the screen. That's your homework. All right, go to that free website. Get the free stuff here. Okay, go down to the bottom and read these 3 PDFs. The first one was the required reading. I told you to read way back when, the PDF here, but then you can read the other 2, and then after that, you can look at these blogs. I think, this one, the Wyckoff Power Charting, is the most important blog. You can go through those materials there if you have time to read that. But yeah, the PDF is all you really need. So let's look at the chart for today. Bitcoin, important. What's up, 12th man? Yeah, what's up, Latino for Trump? You guys stop by for a visit. Very good. So let's look at Bitcoin. Now, this was really fun to trade MSTR with this Bitcoin thing. So this is what I saw on Friday. I did not like this. So this is a 4-hour chart. So with crypto, I usually use 4-hour, 40-minute, and then 7 minutes. So it's not like how I would do at stocks. So the way I divide up my chart is 7-minute, 40-minute, and I'm not going to explain why I picked those right now. But essentially, it's like it's divisible by 6. So my fractals are by 6 here. And someone way back when told me this is the best one to do crypto. Do all your fractals by 6. So that's how I picked them. Okay. Now, if you look at this 4-hour candle chart on Friday, okay, you see this one. It had a lot of volume there. This volume was larger than this, and the largest since we had this big one here, this big push up here, 5.65% on 4 hours way back in Wednesday, November 13th. Okay. So look at all that volume here, and it didn't even go anywhere. And that was just after this one, this candle here, where he had a deep cut down before recovering back. So whoever did this, if they thought they bought here, if you thought they were buying this, then the next one should be more significant, right? But the problem is you have all this volume and you went nowhere. And then the next 3, you just slid back down. Slid. So this is not a good look. Yeah, this is not a good look. So that's why now I think we're at least going to go sideways. The worst thing is Sunday when futures open, because you have to understand Bitcoin and Ethereum have a futures market. So a lot of the action on the weekend could do anything that nobody really cares about. It could just be easily reversed in the futures market. So it's heavily controlled by what the futures market does. Now, if I look at something like Doge, this definitely doesn't care about futures. There's no futures market for Doge. So it does whatever it wants. So what I saw last night, because I was paying attention to Litecoin. So one of the things I learned was that Litecoin is sort of a signal, I don't care if you like Litecoin or not, but Litecoin kind of leads things for the altcoins. So Litecoin went up first around midnight GMT, okay? Midnight British time. And then later Doge went up. Yeah, so something happened there, right? So Doge started going up just after that. Definitely 1 hour in. So the first hour was up 5 along with Litecoin, but it continued higher. So then, okay. Now, what about Ethereum? Ethereum, no, nothing. Kind of ignored it for a little while, but now it's moving up now. And Ethereum Classic, because since Ethereum no longer is proof by work, Ethereum Classic kind of you have to pay attention to now too. Also, like yeah, Friday. Yeah, nothing really interesting here, but it is moving up steadily though. So we got that. Now, are we in alt season yet? This is the question I'm asking. Yeah, well, this is the question I'm asking. Because if Bitcoin cannot make it over 100K significantly, like it just touches 100K and maybe goes over it like a few thousand and then comes back, it's just stuck in a range, right? So let's say Bitcoin is stuck in a range from now into January, then we really have to look at the other altcoins. I would assume that as Bitcoin goes sideways, all the action will be more into Doge and whatever. The worst case scenario is that like it just craps out and falls right back to 90K or lower. And when that happens into Black Friday, then December may not be as interesting as I thought it would, because I thought this would last at least through December. So this is the question I'm asking. Now, okay, I'm going to hide the banner. So I'm going to replay this Wyckoff analysis for the Bitcoin. Okay. So I played this already. I'll play it again.
Two camps of people. One camp is, listen, I've been in this position in Bitcoin for quite some time. Is this the time to sell? And the second camp is, I have missed the whole move. Is this the time to buy? And what an amazing behavior by those two groups. And I think that both express the emotional worry, anxiety about this move, which is to be expected, because when something as popular as Bitcoin moves so much, the standard deviation increases dramatically. You are going to have the sentiment shift, which is going to be pronounced. And my answer to both of the groups is no, you do not sell, because this type of strength actually suggests further continuation, maybe even after the reaction, but still, it's not going to just stop after the initial move, because institutions are still buying. And no, you don't want to stay on the sidelines as well for the second group. You have to find some kind of point of entry opportunistically, obviously. And that's going to be really challenging after this move. As we look back into the history of how Bitcoin moved before. So I think that, Bruce, we are probably somewhere here after this and after this, coming like after the new high. This is just down sloping, so just the new highs, the consolidation is here. This is more horizontal, so this consolidation is here. So look at what's ahead of us analog wise. Obviously here the move was so aggressive right here. Same calls are coming in. Should I hold? Should I sell? And I say, like, find the place in this uptrend where you could potentially come into the position. Something like this, something that reacts and still shows the strength of buying and still shows the strength of the momentum and continuation. And you're going to have a lot of movement in front of you until you see something more meaningful.
So that's quite bullish. Okay, if you remember that. Now I'll play another one. Okay, let's see what you think of this. Okay.
Isn't that interesting that it went up and touched that minimum objective and then had a meaningful reaction? And literally all the move up has come with the closing very close to the highs, every bar. It's just, there's very
So if you look to the left, you see that green square, a rectangle he drew there. So with that point and figure analysis, it's going between 93,000 and 102,000. That's the range. We're already close enough to 102,000. We can tap it. Now, the question is, can we do this whole yellow range? So the bottom thing is we took the accumulation area of the point and figure analysis and we project up to 118 to 127,000. Now, I did my own point and figure analysis for the longer term, and I think I said the lower bound was, if I can find it, I did that analysis several times already, and I presented it to you guys. So let me see. F. Okay, let me see. All right. So I said it was 138,000 to 185,000. Okay. So if this is going to 127, 118 to 127, then yeah, I guess we could hit closer to 130. Now, that would be the fourth cycle, and I'll explain that later. Okay. Ever look at that H bar? Yeah, I have that on my list, Claris. I mean, I know about H bar. I've heard of it before, but I'm not a crypto guy, so I don't trade that stuff. So I'll have to look at that chart. Anyway, but we're not if we're not in alt season, then I wouldn't care too much. Like, it's not ready yet. Because that's hard to tell. I think when is alt season? People got burnt on the 2021 I mean the 2023 action, right? They thought maybe alt season was no, that was a fake out. 2021 alt season wasn't very long. It was just 3 months. It was when Bitcoin was going sideways for most of February into April, and maybe some of the coins were still active after May, but for the most part, yeah, I don't know. It's hard to tell when these smaller coins get a real piece of the action, right? Because I think that at that time it got very distorted when China bailed out. China basically said, no, we're going to shut down all Bitcoin mining and start cracking down on any type of crypto exchanges during that time. So that hurt probably a lot of the potential altcoin season. And now that China's out of the picture, most of the crypto stuff is underground now for Chinese citizens. It's like, well, that took away a lot of the juice from that market. They were big players on crypto. China was, so especially when you look at the smaller coins, that's where all the action was, right? Oh man, yeah. So that hurts. That does hurt. I don't know if things are going to be playing out differently this time, because if the well, yeah, it depends. It depends, because I think a lot of people did get burnt, even in America, from the last pump and dumps. There were a lot of last like last minute chasers that came in at the top. They probably never would touch crypto again. They swear off of it. But now we got Trump. Trump is pro crypto. Maybe that kind of has a different flavor this cycle. So this is all about cycles. So I'll explain later. We got to get to the cycle stuff later. But let me continue with this video.
Tiny tails on the way up above the market. And so this is so interesting to me. If this is truly a big bull run, and it's a gorgeous structure, the bigger you draw it, the more data you put in the chart, the more beautiful it looks. And I suspect with a market that's as strong as this, that if, let's say, this 93,000 to 102 is a local objective, that it's going to go up to the 102 level and maybe even slightly throw over that before it has a really important pause. And it might just be a backup and nothing more severe than that. I suspect that we could go to the upper objective, which would be confirmation of the strength of the bull run, is when you fulfill your upper objectives in the range, the point and figure range, and maybe even slightly throw over them. That is actually an indicator of strength.
Okay, so let's go for intermediate target of 103. If we can get over 103,000, we'll revisit it then. But it might not happen before Turkey Day. We might have a dip on Turkey Day, and that's what I'm expecting right now. That there will be a dip. This is the last chance to get in for a December rally, and that December rally could be quite extreme and have a pullback right after. Anyhow, man, I did not want to do that. Let me put it back here. Okay, so let me give you the alt season chart. Here, go look at this. Go here. This is the altcoin season index. Okay, that's the link. Now I'm gonna share my screen. Okay, blah blah blah, right here. All right. Oh, Turkey Day. Oh, are you Turkish? Turkey days every day. Anyway, okay, alt season, blah blah blah. Here you go. Here, right here. So there's this alt season index. Okay, let me zoom out a bit. Now, if you remember 2021, that was the last major bull run. You had this time between around late February into July. So during that time, Bitcoin went nowhere. It was just goofing off sideways before the final crash of Bitcoin took everybody down. That's what you have to worry about. Bitcoin shouldn't crash, but it should just at least stay going sideways. As long as that is happening, so if it's going sideways above 100,000, that's the best case scenario. People will use Bitcoin to fund the other altcoins, because it's very easy to transfer between other coins from Bitcoin at that point. So you use it as your slush fund to trade. So that's when you'll get the pumps in your altcoin. Okay. Right here, we're still below 50%. Once we cross over 50% on this index, I would be more interested in the other ones as they're more serious. Because right now, the only one that really had any big gains was Dogecoin, right? Or XRP. XRP probably more, both XRP and Doge probably more because of what the new administration is going to do for them. XRP had a lot of trouble with the SEC or the CFTC, and those regulations are probably going to go away. And Doge just because meme, Elon Musk, blah blah blah. That's it. Those are the only two reasons. But the other ones, there's no real reason for them to outperform or anything like that right now, or do anything. Yeah. So outside of those two, I don't know. Right. I'm not experienced enough to know what the other ones have or any benefit from the new administration in particular right now, because Trump only talks about Bitcoin. The other coins are just going to benefit from regulation, deregulation type of things. No, you're not Turkish. All right. Okay. Well, that clarifies that. Anyhow, let's see. Okay, I finished that. Okay, talked about that. That's good. So now I want to get to the cycles. Okay, guys. So this is the cycles for Bitcoin. Bitcoin has a pattern. Okay, this one you can look up in the foundation of the study of cycles. Okay, let's see. Blah 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 blah. No. Oh man, let's see. Nope, not that one. Nope, not that one. Man, it's so hard to find anything on StreamYards. Okay, here it is. So Bitcoin has this kind of pattern. It's around 200-day cycle. Okay, so there's a 200-day cycle around there. On average, it's 200 days. And between every 200 days, there's another cycle to it. There's a pattern of 5. So the first 200-day cycle, second 200-day cycle, third, fourth, and fifth is the bull market. Then 1, 2, 3. So 3 200-day cycles is the bear market for Bitcoin. It repeats again. 1, 2, 3, 4, 5. Up. 1, 2, 3 down. 1, 2, 3, 4, 5 up. 1, 2, 3 down. 1, 2, 3, 4, 5 up. Right now we are on cycle number 4. So this up move right now is cycle number 4. And the last one, cycle number 5, will be the final one. Now, if you notice, cycle 5 was larger than the cycle 4. It went to a new high, except for the last one. You see the last one? The last one, cycle 5, barely was higher than cycle 4 in 2021. Now, was that because of China? Was that because of COVID? Like, we already went so far ahead because of COVID. The QE already like pushed it up as far as it could go and for, or is it because now Bitcoin is so expensive, it's harder and harder to get bigger pumps? That's the question. How does that affect the alt season? I don't know either. I wish I did. If I had a lot more time, I would try to figure out, do all the cycle analysis for Ethereum, for Litecoin, for Doge, for everything. I don't got time for that. Okay, but you can see there is a pattern, and all these patterns come from the halving period. Okay, and I've discussed the halving periods for some reason is aligned to the presidential cycle. So whoever made Bitcoin put that halving cycle quite aligned, quite well. They placed it the time that you did a halving for the mining rewards on Bitcoin. You did it around the same time as a presidential cycle. So very convenient. Okay, so that's why now you get this pattern in the cycles. Okay, now I'm going to show you another picture. See what we got. So this is the analysis that we have for. Okay, I gotta give you the link for the foundation of the cellular cycles. You can go their YouTube channel. You go over there. You can search Bitcoin on their channel. Okay, and you can find some of the presentations about it. All right. So, and you can be a member too if you want, and get their tools if you want to pay a donation for it, because it's a nonprofit. But anyway, I'm just shilling that for now because I'm a member. Because yes, I believe in cycles. Cycles run the world. You know the cycles, you can time the markets, no problem. So this is what we have the analysis of. Okay. So currently we are in a 188-day cycle. So I said on average is 200 days, but it can deviate plus or minus some number of days, and it could also deviate on the phase of the actual cycle. You know, Portia will probably like this a lot more. You know, she can understand phases of sine waves, cosine waves, and stuff like that. And so this is how it is. So you have a frequency, 188 days. You have a phase where these circles, semicircles, are aligned to the actual price. And right now, I don't know if you can read it because the resolution when they presented this thing to me was not very high. So it's not clear what dates we got here, but I'll read it for you. Okay. So the bottom after a phase, the cycle number 3 goes down to September. Then we're going to go up into November 30th, which is going to hit now. So the top is coming in for Thanksgiving and then pull back into January, okay, before the final move up in May next year. All right, so that's how you should read this. Now, what I'm going to do is I could do an analysis for you right here with the tools given, okay, live on the stream. And then you can see how I do this. Put some let's look back here. No, that's not it. Hopefully my computer will have enough memory. It won't crap out because all this cycle stuff takes yeah, it takes a lot of memory, I think, for the browser, because it's browser based. Okay. So here, Bitcoin. Okay, let's see. Okay. So this is what you do, or when you do your analysis with their cycle app. So this is the foundation of the study of cycles. Okay, so you got the link in the chat. I'll put it up again. Go to the YouTube, and you can find them. So the foundation of study cycles. So we've got our analyzer here. Okay, so this is 850 days. So let me just see the whole chart here. That as much. I'm using the futures chart, by the way. Okay. No reason in particular, but futures at least close the market on the weekends. So I don't want any weirdness. I don't want any of the weekend data, because that could just be trash. Because now the Bitcoin is highly controlled now, okay, by the financial institutions. Okay, so I picked the last big top in April 2021. Okay, I'm gonna take it all the way over there. Now we see some cycles here, 285, 200. So these are the major ones. So since we know that 200 is more significant, I'll pick the 200 one. So we're running up to the last major top, perhaps. We're getting close. So if we just believe the cycle analysis all the way, it says that December 2022, December 22nd of this year is the final top. Usually that doesn't happen. That's not the ideal case. Sometimes this thing will just crash before it happens. Sometimes it'll last until January before it happens. So you kind of take the tip of the top here, and this whole region could be potentially the topping area. So you don't really know right now. So we can look at the bottom, and this is a cyclic RSI signal. What happens is this red line goes between these bounded blue lines, okay? When it drops below it, when it goes up to it and then drops down, back down, that's it. It's over. We're done. So we still got time based on this analysis. All right. So, I mean, after that, we'll bottom again around April, move up from May, June, or July. So maybe June and July is actually where the final fifth cycle top will be. And after that, it's over. We're done with the bull market for Bitcoin until the next 3 years. About 3 years. So it's like 3 to 4 years, okay? Because we're locked in with the presidential cycle, the way Bitcoin is designed. So this will be the first top, and then the second top will be in the summer next year, sometime. So that's what I'm expecting right now. So pay attention. Pay attention to Bitcoin. Is it going to go sideways? So even though this thing says it's going to go down from February to March, because usually from the number 4 to number 5 cycle, it'll drop 30 to 50%. It's usually very extreme. But, you know, we could be in those early day eras where the 4 to 5 that didn't happen, it might go sideways. That would be perfect. If it went sideways from January, late January into May, that will be really good for an altcoin season. Then I'll be interested in looking at all the other trash out there in crypto land, because those things could be pumping like crazy, right? We could have Shiba Inus all over the place. So it really depends how this structure will look like. If it just drops 30 or 50%, if Bitcoin just falls through, then it's going to be a short season. But if it just holds on, stays up around 100 G's, 90 G's, whatever, fine. We got a good altcoin season. That's what we got to watch. This is what we got to watch. So be aware. Bitcoin could be done moving up. Doesn't mean it's going to go down, though. As long as, see, like, you look at this one. Look at this one. Look at the down movement from May 2024 to October, right? So you see the cycle is moving down. It doesn't necessarily mean like stock prices or crypto prices or any price of an asset should go down with it. It just means like it might not do anything. It can go sideways, and that's perfectly fine. So when you look at this, the bottom here was August. You here see the last time Bitcoin went down was around early September. It aligned pretty well with that cycle. So that's why this 200 cycle, we got to keep paying attention to. So this is my question. Is Bitcoin going to go sideways between January and May? If it is, we have a long altcoin season coming up next year. And this is where all you gamblers are going to love it, because you can just trade all day, because everything will just pump. It's easy. When things are just going crap, it's way harder to day trade. Now, let's go back to what I'm saying, because the reason I say that is because stocks right now are quite easy to day trade. Why? Because the conditions are good, just like altcoin season. So in the stock world, there are trash stocks, penny stocks, and it's just like shooting fish in a barrel. When you have a good liquidity, very good conditions, it's just no brainer how you approach a stock. When it's bad, you never touch these stocks. But when the conditions are right, you touch them, just like in the crypto world. So when you do altcoins that are really junky, that's just like the penny stocks in the stock market world. So let me show you, right? See what we had here. Well, actually, I can show you this one, CLSK. So this is a Bitcoin miner. So it's tied to Bitcoin, but it's also a trash stock. Not necessarily a penny stock, but it was tradable on Friday. Okay, so I can go look at the 13-minute chart. So on that day, Friday, so Thursday before it, you closed here, and you knew this support was around $13. On that day, it jumped up, moved down, jumped up. So it looks like it's very volatile, but it started steadily moving up. So I probably, you know, if you wanted to day trade it, you got in here, you set a stop. Like you say, like, okay, I get in within the hour. I say, okay, I'm gonna buy it here and set a stop, maybe down here at 13 if I'm allowing it to, and then I just let it ride, because it ran up the whole day, up to about just before close, 30 minutes before close, it reached about 20% or something gain from the bottom here. So you had a lot of room to move that day, just on this. And a lot of stocks have been moving like that. So that's why you see the tickers scrolling at the bottom. Let's see what's on the speculation list, right? You had this nuclear stock, NEE, moved up that whole day. So first it was crashing, but it hit something, right? It hit something, and it jumped back up. It's just like, well, whatever, you know. You just go like, all right, you just pick your poison. There's like so many other ones. Like you had the Rocket Labs, right? The whole week it was moving up, and then you had Lunar, like all the space stocks, it was moving up. And then these crazy bad boys, the quantum computing stocks I've been talking about a week. I don't trade them, but I would say, like, if you're paying attention to them, you could have probably jumped in every day and tried to trade it up, because it's just following a pattern here. And this, oh god, this QBTS, this D-Wave Quantum Inc., this thing just jumps all the time. It's just like, what the hell? But this is due to the good conditions. If you look at the ETF, IWM, the Russell 2000 ETF, okay? This is the small caps. You see, when these things do well, you probably should look at the penny stocks and things like that, because that means the liquidity is doing well. And IWM, also the same thing with XBI. Now XBI got damaged because RFK got appointed to be like the head of the health department or whatever it is, and also because of options expiration, so it crashed. I don't know yet. I gotta wait and see if this thing can come back up here. So XBI is the trashiest of the IWM stocks, but you see these, look at that. So we haven't been this high since November 2021, when this thing was moving up in January, October to January, February of 2020 to 2021, right? October 2020 up to February of 2021. This was the last period of the exuberance. Now we're back up here again. Once this breaks out, all the trash stocks are moving up. So expect more. Like, you're gonna see AOI. Look at this bad boy, up 41% like last week. Why? Because Nvidia, or is it because it's just trash? It moves up a lot more than its peers, that's for sure. It's a garbage company, but it's easy to push up and down. So when the conditions are good, it doesn't matter how bad a company is. It doesn't matter about the fundamentals. All you gotta look is like momentum. People are buying it. They're chasing. So yeah, we have to pay attention. Really have to pay attention. Now the other ones, MindMed, psychedelic stocks. So I've been buying it down here at $6.80. I think this thing can go back to 10. Atai, ATAI, this one, another psychedelic company, all right? And this one's sponsored by Peter Thiel. So we got Peter Thiel, you know, he's friendly with Trump and, you know, Palantir and all that stuff. So like I said, there's a lot of companies here. And we also have some that are in the bottom. So as we go into New Year's, there's a lot of these stocks that have lost a lot of money for people, and they're selling it for a loss. And when you run out of sellers, guess what? Stock prices have to move back up. Now, the reason I mention that is because I was in a stock like that, like Carvana. So during 2022, Carvana was the worst stock ever. Like, the stock market wasn't doing well in 2022, but Carvana was just always beat up in the media. Everybody said it was a bankrupt, going to go to bankruptcy, and I said, whatever, I'll take a chance. So here, you see this? It dropped down to $3.66. It hit it again just before New Year's. $3.63, right? I bought it. Guess what? After New Year's, it just moves up. Now I sold it at around here, $13, $14. I didn't get back into it. I should have, because what happened? This thing went from $7 in May 2023. Now it's $262. Yeah, I should have just got back into this thing. I didn't know this was going to happen. But like I said, you know, when you look for trash that have been beaten up so badly into December, that means there's opportunities. At least for a trade. Doesn't mean like it's all going to be Carvana, because Carvana went up, what, 10,000% after this or something? This is about, because I talked about this before. So let's say I bought at the absolute bottom. Yeah, 6,000%. If I held it, yeah, sure. I mean, nobody knows like it was going to go that high, but hey, I'm just saying, right? Like you could got good things. And, you know, this is how I got Palantir too. It was around that time, see? December 2022, it made a low at $5.98, lower than the May 2022 low. But I told people to buy it around 7. I mean, I didn't expect it to drop down to 6 or lower, but you know, I would say 7 is a good place to buy Palantir. Yeah, it's up now since $7. What, 800%? Not bad. So, like I said, look for trash when it comes to the New Year's. Look for the worst, most beat up stocks, because you never know. Some of them might fly pretty good in the coming years. Doesn't get no guarantee. So I'm looking at something like here, NOX, NOX. I think this is a garbage company. I played it when it had its IPO because it went from 20 to 90. That was during the bullish era in 2021. And if small caps are going into that era again, even companies like this, you know, have a chance at least to jump up. At least you can get going from $6 to maybe $20. That's a good trade, right? So it could even go there before the next earnings. And the next earnings, maybe the company says, oh, this is junk, we can't do very well, and then it just crashes back. But at least you got time between now and March, because it already just released earnings. So you got three months for it to fly on no news, no reason. It can just do that. So yeah, look for companies like that. This is perfect. These are the opportunities to trade at the very least. And let me see what the other ones are. I think I mentioned Nova. Nova has been doing very well. You see here? So last week it was up 30%. And I was talking about it since Trump got elected. Yeah, solar stocks are junk. I know Trump doesn't like solar stocks, but who gives a crap? I can trade it because I saw that it was doing this. You know, it's trying to stay above $3.60, and finally it broke out. So what I'm going to wait for, because this is important, this level is important here. Okay, so now we're close to $5. So I think it's going to have to pull back. So I'm going to wait for it to pull back. Hopefully it gets to $4, halfway point of this red candle here, this large red candle since the election, and then push up after New Year's. So I'll be watching this in December. There might be another entry. Get in after New Year's. It just pumps because everyone that sold it for a loss for tax reasons are done. So a lot of times stocks will just move up because there's just nobody willing to sell anymore because they all got out at that price, you know? So the people that bought at $3.60 and sold down at $3 said, like, I can't take the punishment anymore. They're gone. So who else is left to sell? Like, the only people that bought are like way up here, right? Like way up here. Like, okay, unless you bought like in the COVID low at $6, you're already gone. So nobody's down here willing to sell anymore. I don't know if this company is going to do anything during the Trump administration, but it's so beaten up that I could see it just fly for no reason, just because it has nobody left to sell to. So yes, Nova, put that on your list. And I also noticed another one I'm putting on my watch list, NVTS. I don't know what news made this thing pump. I'm sure there was some kind of news, but it pumped on Friday 19%. And if you look at the long-term chart of this stock, NVTS, it is at the bottom. It was at the bottom last week, and it pumped all the way up here. This is a pretty big candle, taking out two significant candles in the previous 2 weeks. So at $2.42, I'm going to say I'm going to watch this thing. I'm going to watch this thing because this might be another trash stock that will do well in January when the new year hits. So I'm watching this one. What other ones we got? T-Doc. Oh, everyone hates this company. People love this company in 2018, but ever since 2018, it just was hated. So see that? January, February 2021 at $286. All the way in 2024. Now it went to $6, and now it jumped up to $10. Also, so I'll watch this one. Telehealth, telemedicine. I mean, that was the hype back in those days, but this one just lost the hype. I think they merged with the company, and after it merged with the company, it just went bad. It just went sour after that. Okay, let's look at some dating apps. Bumble, garbage company. Total garbage. But guess what? Maybe it has a chance to recover next year. So I'm going to watch this. Bumble. BMBL. All right? Bumble. Put that on the watch list. And then another dating app company. Tinder and all that. Match Group. Oh, look at this. Trash. Utter garbage. It's been at the bottom since May of 2023. But hey, it's a new year. Maybe its fortunes will change. So I'll watch this one too. I'll put that on the watch list. Okay, so yes, I like watching trash. RXRX is another one here. See this one? Yeah, RXRX. I mentioned this before. It's part of the AI stuff though. So I'll talk about that some other time if I'm not talking about this stream. Okay, so that's enough. I think you have a good list of bottom feeder stocks. That's why I call bottom feeder stocks. Let me play a video because now I want to switch gears about natural gas, because a lot of you guys have been asking me about that stuff. So let me give you a professional opinion on natural gas stocks, okay? Because I also played a video about oil and things earlier, and in the first video I played about the bond vigilantes and what they think about next year. And I think that's very important topic to discuss in the coming new administration, and we'll see what happens. So watch the bond market come February after Trump gets inaugurated. Okay, let me find the video. Here we are.
Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
Nat gas looks good. Yes, I had a conversation via DM with the client Anne, and she is, as you know already, very bullish nat gas for all kinds of reasons around production. They haven't been producing it. So this is definitely an area of consolidation on a daily. This is nat gas showing you we're also getting a 5% push today. Stuff that is very interesting, sweet spot, at least I think anyway, for nat gas plays. If you are interested You've got EQT, which is, by the way, Anne's favorite. So this is the one that she has played, along with LNG. So you have these two already. This is not anything new. Shipping and Europe, oh my, the nat gas plays that are very strong and long for client Anne have been LNG and EQT. Nothing new. I was asked about a few others. So this is one, CNX Resources. It's extremely extended, right? We're beautiful, and then it takes off and it doesn't stop and it comes back just like a KMI and Williams, and boom, it just pushes higher. So CNX is another one, very lovely, but extended chart. And this was the one that client Aaron asked me about. And when he finds something, and I'm like, he's done some research on it too behind the scenes. So this is one that had been consolidating, and it is looking very fine, a little extended from the mean. This is true, but big picture, this is at least a closer base. So liking some of these, even though they are extended, look at how they beautifully came up 45-degree angle, then sideways, and then breakout, pullback was shallow, breakout. Now it's not a shallow pullback. It's a freaking chase me if you can, but that's another one, Kodiak. And then a little bit different flavor here is CRK. It's oversold, but it's trying to be relevant. It's trying to get up and go. If you are in the nat gas space, take a look at this potential as well. Do your own due diligence. I'm just kind of spying the ones that looked most interesting to me. So you got my market thoughts, but I want a sector rotation might be very interesting right now for nat gas plays. And then one that is under distribution for years and has just gone sideways is RRC, but it is trying to pop above the 200-day. So RRC is trying to come up off the bottom. CRK is trying to make, at least a 52-week high. It has made a 52-week high, but not all-time high. And then we've got this very, very strong move in KGS. And this is just starting to break out. Thank you, Aaron, first of all, for even putting me on all of this, because I started looking at him. He is the one, by the way, who researched and asked early on about Williams and KMI. And when I say early on, I mean, he was back here, like when they had just started in this consolidation phase over here before they moved higher, literally. So those are some nat gas plays if you're interested. I just wanted to bring those up and kind of highlight those before the market starts. And it looks a little bit kind of quiet this morning. We've got the Bitcoin rally, we got the nat gas rally. Oh, if you like nat gas, I'm not a fan of UNG by any stretch, but I will admit that it does have a little bit of a inverse head and shoulder here. Obviously, we're popping up pre-market. It has a trend line that it seems to want to kind of go tag at some point. Also on a daily. So it's got a weekly trend line. It's got a daily trend line. It's got a little inverse head and shoulder. The big level to get above is going to be that 15. So, and then it still has to deal with a descending 200. But you know how these can be kind of volatile and eruptive and all that jazz. We are sitting right here at 1437 pre-market. I don't like UNG per se, but it is a very fast trade if you can hold on tight. And then, by the way, it's a very, very fast short if you can hold on tight. Anyway, this is forming a little bit of a move here, what looks like from kind of 14 to 16, 17 for UNG. Only as a chase. I would never invest in UNG. It's just, that's a chase vehicle. Nat gas, big, strong push higher with dollar. And then you also have ET, which is already, this is the prior high before the oil industry recession, 14 to 16 kind of thing, but much thinner. Very much came up off the bottom. This is amazing resistance here. Wow. All right, so this is a little bit different animal, much different animal. Wow, this is broken out very, very, very strongly this month. It did not look bad at all. I haven't looked at this. I have not focused on this. Oil and gas midstream has done extremely well. And now this is a breakout. You got a huge channel up here. 1650 is support. 20 is solid resistance. That's it right there. That is the frame that if you are, look at that. It's right into the prior high of October 2018. That's where it needs to get and stay above. Sharp. And Anna's saying one of the reasons why the nat gas move today in general, because the weather forecast is for cold. Finally, somewhere besides the north and upper Midwest. Be warned that warm weather is expected to return before Christmas. Yeah. I do like yours better though. The EQT, oh my goodness, it is parabolic though. The LNG, that is also parabolic. And the ones that I went over this morning that are still firing very strongly.
All right. Let me pull up my natural gas chart here. So I shorted. I shorted on Thursday. So when they had the last pump, I just shorted. Now it's back in range. All right. So I got on my short. Okay, made a little profit there. So this is natural gas futures. I could do the spot. Similar picture. You see, it has this rectangle area too. So that's it. You hit the top here. You're gonna pull back. I don't know what the forecast is because you have to worry about natural gas. Even the weekend, you have weather forecasts for the coming couple months, and they change. And that's why, if you trade natural gas, it's kind of, you take a big chance holding it over the weekend. And one of the weekends, you had the whole Israel, Iran thing. So when Iran didn't retaliate, the natural gas crashed right after that. So yeah, weekends are quite dangerous for like commodities like natural gas or oil. You want to play around with that. But yeah, and I use cold and boil. So cold goes down and up, okay? Inverse to where natural gas is. So this is how you short it. Use cold, KOLD. Okay, so if natural gas is going up, cold is going down. Cold is going up when natural gas is going down. All right, so boil is the one when you think natural gas is going to do well. So boil is the other direction, BOIL. So keep that in mind. Yeah, and I could show you what I did. Let me present. Hopefully my memory doesn't run out here. I can show you what I did. So I traded several things during that whole Friday. Yeah, so that's what I trade. I trade cold. I still have my SMCI log. I paired that off once I get to 33. I sold my Lab U, so that's the XBI leverage ETF. Sold that one. SMST is like the short MSTRs. So I was long MSTR, then I shorted it at the end of the day. So I day traded that. So that was two directions. I didn't screenshot the time it was going up. It was the same thing I showed you with the chart with the CLSK. So same thing with the Bitcoin. It was recovering. So that's why. Okay. Let me just here. Let me show you. Here. So back before that. So this is the cold. So cold. Yeah, I told T Spells about that yesterday. On Thursday, I was shorting using cold, and I know she can trade futures, so she doesn't need to use cold or boil. She can trade. But if you can't trade futures and you got a Robinhood account and you want to trade overnight, you can use cold and boil overnight on a Robinhood account, okay? And maybe an interactive brokers account might let you do cold and boil. I don't know, overnight too. So if you don't have time to like figure out how futures work, because look, natural gas futures, they have a Henry Hub. They also have a Henry Hub Mini, okay? And if you do that, then dude, shit, yeah, it's crazy to do natural gas. I don't think a big doing futures trading should go like even an expert. I don't know. Natural gas is crazy, man. It's fucking nuts. It's a psycho. That's why they call it a widow maker. So I think if you want to trade natural gas kind of like futures, then yeah, you can use cold and boil on Robinhood or something like that and practice that way. Maybe I don't know if that's the right way. You should learn how to trade natural gas, but I would tend to stay away. from doing too risky of a thing on natural gas. But yeah, you could try it. You could try because they have overnight trading on Robinhood, so you can try to do that. Anyway, let me get the chart here for the Bitcoin, so I can tell you, like, if you, yeah, I did a few times during, because it's so easy to see it on the chart. So then you can just really just, yeah, you can just try to do it yourself. So I mentioned on the last stream about the, let me see, okay, let's go back here on the Bitcoin. Okay, so this is why I did MSTR short during the day. Look at the 40-minute. So it was on Thursday I was shorting MSTR, right around here. Yeah. So let me put MSTR, and let me show you here. Okay. So I'll use the 13-minute. Okay, it's evenly divided. So this, right? It propped up. So this was into pre-market, and then it opened this at this point, and it went straight down. Now you see the next two candles. It couldn't even get higher than this midpoint. So this is why I drew this box here. So if you drew this box, go all the way up to the high, the midpoint is exactly where MSTR was staying. So MSTR is Michael Saylor's little company that just buys a bunch of Bitcoin, right? You see that? So it stays below the 50%. So anytime you have a range and you stay below that 50% point, you're going to expect something. And this thing was just like struggling. So this was the time to get in right here to short. And then when it crashed right after, so 1, 2, so 30 minutes, within 30 minutes, boom, this thing went straight to here. And why did it go to that level? This level is where it closed on Tuesday, right there before it got over here. So this level was important. So I closed my short here. It went back up, but it went back up right there. It couldn't even get close enough to that 50%. And you already see the moving averages. So this blue purple line is the 18 moving average, 13. So once it starts going down, and then you see the 40 flatten out, guess what? Look at here. Look at this candle here at the 18-hour, 11-minute UK time right here. You see this volume? There's a lot of volume, and it couldn't even push that thing anywhere. And the next candle, it's like it barely does anything. It closes right back, and then you go down. That's it. You just enter the short again. Boom. That's it. So you short again, and then you go all the way down here to the next level. And why is that level significant? Because it was the top here in November 13. You even crossed right, because this area was kind of like an area of resistance where it's like, okay, it's building up energy to push up higher. It just went through it like knife through butter. Whenever you go down, it's easy. But when you go back up, guess what? So it closed at here. So I didn't take this trade. I was kind of like on stream and saying like, well, you could take a chance and bought at the low because it undercut it. If you bought here at $372 and went long, maybe, yeah, you could have. Yeah, you could have. A chance for the next day, because the next day you start moving up. Because once you see this, like here, it couldn't even like get down deep enough into the back to 380, and it just recovered. And then next candle, you just have the next two candles. You see this, it just tries to. So that's why this whole rectangle area is so important, because you see it spends time, a little bit of time, building energy to try to get back up. Once you see that, you're like, you're going to take a shot. Okay, I'll enter here at 400 and make a stop loss at 415 or something like that, right? 415, yeah. And I'll make a stop loss at 400, and I'll just go long, whatever. And then look, it just goes long. And the funny thing is, it goes back up here at the green line, and that green line is the top of that Thursday. Way back when, last weekend, November 19th. And when it hit there, you look at all the volume that comes in on that candle. It's kind of a parallel to the volume that comes on this candle. And it's like, oh, and then a red candle just comes in. That's when I thought, like, all right. The next time it gets back up to that green candle, I'm selling. And I flip to short just before the market closes, because I know none of these guys are going to come in on the weekend, right? Because you can't trade MSTR even though Bitcoin is still traded over the weekend. So I know all these guys are probably going to try to get out of here, because once they see it can't get up anymore, they're probably like, I'm done trading this thing. I'm getting out. So then it just crashes right back down. It was like, oh man, that's too easy, you know? Oh, this market environment is great. This is great. When you got all these bubbles flying around, this is the time to play, you know, but like I said, you can't do this all the time. I try not to average, but you can use it, because the same charting techniques can be used as in investing or whatever, day trading, because you just change your time frames, you know. In this case, you can use 13, you can go to 3. So I use 3, I use 13, so 3-minute, 13-minute, 65-minute, and then daily. And the other reason you would short here too is because you see on the 65-minute chart, so the 1 hour, basically the 1 hour chart, the 18 moving average starts going flat. So, and you know this is a significant area because this was the last red candle, large red candle here. So it's probably going to have a hard time going anywhere now after it got here, because it's just before close. There's only 1 hour left in trading. Like, what's going to push it up? You're going to have some catalyst. And at that time, Bitcoin was right here. This is Friday. It was already starting to move down. So anybody that was still trading it would probably have been like, whatever. So yeah, that's it. Anyway, yeah, let's look at Bitcoin today. So yeah, you see this? It's still goofing off here. We're gonna have to wait for Sunday. So once Sunday around 6 o'clock, 6 p.m. Okay, so 6 p.m. on Sunday, futures will open. Then we'll see what Bitcoin will really do. All right, and for that, things will be interesting for Turkey Day. So we'll see if we can trade any of this stuff again. I probably won't. I think I made enough money last week. I'm pretty much finished. And I want to mention some AI stocks. Very interesting. So some things I've noticed, sound very good. So it went right back into here after spending, you know, since it's spent here in March at the top of this range. Now we got back into it. We've digested the earnings. Now we're going back up. So, like I said, if this is a good time for small cap trash stocks, things like Sound, SOUN, and AI, the ticker AI, yeah, also trying to make it back up to 50. I don't know. I'm watching these things. I'm watching this trash stuff. These things. And you got to say, like, you know, Upstart, you know, FinTech. There's also like a lot of this UPST, Affirm, AFRM, also breaking out after hitting 47. So a lot of these things I'm going to have to pay attention more now to, that they've all started to break out. Now we have to think about how semiconductors are going to go forward. We have to wait for Avago, AVGO. So that's Broadcom, this company, and Marvell, MRVL, and MU Micron. So those are the next three earnings to look at for the semiconductors. Now, if Samantha is right and that we're going to rotate some money out of the software and push this thing back up. So if this thing can get back up to 260 or even clear this gap at 270, then yeah, this could be a good long to try to get into for the rest of the year. Rotate into that. Now let's look at some other bottom feeder stocks. So Moderna. Perfect. I didn't put that on the list. Moderna or Pfizer. Pfizer. Oh, same thing. Yeah, Pfizer. So I'll have to add them to my list of garbage, hot garbage going into New Year's. This is perfect candidate for a reaction play in January. Yeah, okay, I'll put this on my list. Moderna, Pfizer, PFE for Pfizer, and Moderna mRNA. So yeah, so that could be a quick trade to make. Let's see. Boeing, I think, actually recovered finally. Okay, at the bottom of that range of 139. So if you got some portfolio for some blue chip that you need to dump in, yeah, we put in Boeing, BA, and I think Intel's still trying to stay above its 21, 22 area. So yeah, okay. Intel could also be INTC, okay? All right, nice. Okay, let me play this one video here so you can look at the overall market conditions, okay?
This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. This is Joe. So, we're going to talk about the market today. Came down and hit some pretty key levels, and we've gotten a really good reaction. Let's just see if it's good enough. I want to go through some of these market conditions because the shifts are taking place a little bit quicker than normal, but I think it's pretty important to stay on top of it. So we'll go through that. Just so you know, when I get into the going through the trends, if you want to learn more about some of these bulls than bears, I'm using numbers, which please hit that like button and also subscribe. All right, let's start out with the sentiment numbers, which continue to kind of move more bullishly at this point. We're up to 42%. More bulls than bears. I'm using the Investors Intelligence sentiment number. I've used it for a very long time. I get questions about this a lot. I find it to be useful for me because I'm very comfortable with it. Find whatever sentiment number you can get on a regular basis and update and use for yourself. But I can tell you that when we get to 40 or higher, 40% or higher, it's not a trigger. It's a condition. All right. The condition is means there's higher risk right now. There's too much bullishness in place. And so I have that marked as a negative right now. Now, I could have kept this overbought. It's at 65%, the RSI 5. It is showing a little bit of divergence still. I could have kept it on the negative side, but I moved it to neutral. But for all intents and purposes, it's operating off of a divergence right now. We just haven't had any follow through to really click that in. And then if we look at the volatility, both the weekly and the daily are back to negative. They're both rising. I'm going to go into that in just a second. And then the trends did not change. We've got monthly, weekly, daily trends all positive. And the momentum, I have not changed either. We've got monthly and daily both positive, and the weekly is neutral. Now the daily, if you had moved that to neutral, I wouldn't have a problem with it. It's kind of borderline right now, but I decided not to change it quite yet. All right, let's go ahead and start looking at some of these charts. So one of the things that just, we've got to be conscious of is what's taking place on the weekly volatility. We've got rising volatility, and when this moving average is rising, that means that the trend of the size of these bars is growing. All right, that's pretty important.
Yeah, sorry about that. I think I gotta get, yeah, probably gonna have to get more memory. Hold on.
This channel that in. Um, And then if we look at the volatility, both the weekly and the daily are back to negative. They're both rising. I'm going to go into that in just a second. And then the trends did not change. We've got monthly, weekly, daily trends all positive. And the momentum, I have not changed either. We've got monthly and daily both positive, and the weekly is neutral. Now the daily, if you had moved that to neutral, I wouldn't have a problem with it. It's kind of borderline right now, but I decided not to change it quite yet. All right, let's go ahead and start looking at some of these charts. So one of the things that just, we've got to be conscious of is what's taking place on the weekly volatility. We've got rising volatility, and when this moving average is rising, that means that the trend of the size of these bars is growing. All right. That's pretty important, because when that is happening, historically speaking, if you look at it over time, you can go back and look at this, a 20 ATR with an 18 MA wrapped around it. When this line is rising, there's higher risk of corrective action. Just like when this line is declining, there's more of an upward bias. All right. So we've got to be aware of this. Just kind of keep an eye on it. Now, we have made a higher high here. This has not made a higher high. Maybe this wants to turn down, but we haven't really seen it quite yet. Until that happens, I think you've got to stay on guard a little bit and be a little bit more selective, and really kind of avoid patterns that look like the S&P chart, right? I've been focusing in, and I've talked about it on this channel for a while now, for probably about a month or two. We're looking at the Russell 2000 because the pattern on that is a nice kind of basing pattern. All right. And it's breaking out, and it did hold the 2300 level on the pullback. So it's still hanging in there. All right. It's not the kind of strength we like to see, but it is, it's good enough. The other thing that I'll say is that the daily volatility has started to rise a little bit. Now, this can jump around a little bit.
Yeah, it looks like definitely need more memory here.
Just like when this line is declining, there's more of an upward bias. All right. So we've got to be aware of this. Just kind of keep an eye on it. Now, we have made a higher high here. This has not made a higher high. Maybe this wants to turn down, but we haven't really seen it quite yet. Until that happens, I think you've got to stay on guard a little bit and be a little bit more selective, and really kind of avoid patterns that look like the S&P chart, right? I've been focusing in, and I've talked about it on this channel for a while now, for probably about a month or two. We're looking at the Russell 2000 because the pattern on that is a nice kind of basing pattern. All right. And it's breaking out, and it did hold the 2300 level on the pullback. So it's still hanging in there. All right. It's not the kind of strength we like to see, but it is, it's good enough. The other thing that I'll say is that the daily volatility has started to rise a little bit. Now, this can jump around a little bit more quickly. If this starts to climb and we don't have a lot of volatility, this will drop pretty quick. All right. That doesn't happen really on the weekly. It takes a little bit more time to develop that. And you can just see the size of these bars here versus the size of the bars here. It's pretty, it's pretty blatant. You can see that the volatility has grown. And when that happens, there's just more risk out there. All right, let's switch over to the different trends. And actually, before I get into the S&P, let's just take a quick look at the IWM, because I want to point this out. When we look at a chart like this, and I tell guys that I'm trying to train, guys that are really new at a lot of the people that are taking my courses and stuff have been in the market for a while, but I've had other people I've worked, coached one-on-one, and they're really new. And I tell them, look, we're trying to find smiles, right? You avoid the frowns and you buy the smile, right? Well, this is the kind of pattern I would be more interested in than the.
You see that? You got to buy the smile. IWM. Why you think all those trash penny stocks are just like, ooh, easy to play?
The S&P. Now, it doesn't mean it's going to work. I'm just saying if the market wants to keep going from here, I think this is the one that gets to take advantage of it. Now, it's possible it could climb and the market could do well and the S&P would keep outperforming. And that's probably going to be because the Mag 7 don't break down. And it's possible that happens. But I'm personally of the opinion, based on all the breakouts I'm seeing in some of these smaller cap stocks, that if the market goes and starts to kick forward, you're gonna be better served playing some of those stocks. All right, look at the difference. You see how much this has already moved, and we're coming up on a new calendar year. We don't have real good momentum conditions in place on this weekly chart. Now, the MACD, anyone who watched my show for stock charts this week, I talked about this specific chart and how it kind of reminds me of what's taken place, or what was taking place in late 2021 before the bear market. Now, I'm not saying we're going into a bear market, but I think we could go into kind of maybe a rough period as we start the new year. We're going to need some confirmation. The ADX is not confirming, just like the ADX was not confirming here. The volatility was going up here, just like it's going up here. So there are some consistencies in terms of what was taking place there. The difference is we don't have any confirming evidence. And until we do, you have to keep an upward bias. And we're going to keep looking for stocks to play. It's not like my subscribers have missed the bull market. I'm not sitting here looking at this and saying we can't play. I'm saying we want to play. We want to play stocks that look good, but you got to be very careful as this, if in fact we do break this moving average, because I think that would be much higher risk. And a lot of the stocks you're playing are going to have a very tough time if that takes place. All right. We've got this monthly chart that's somewhat extended. Again, I'm leaning towards, with this being another week or so left in the month, and then we have one more month after that, and we have a holiday later this month, and then we have a couple holidays in December. It's just not that many trading. We're talking about 22 trading days left of the year, and 22 trading days, and there's some of those are holidays that are in between holidays. So I think it's just hard to expect a big drop to happen right now. All right. We've got to stay on guard. And one of the things that's taken place here is that we've popped to a new high, but we didn't really see the ADX. Like the ADX here was pretty decent, but now we've gone to a new high and we don't have the confirmation in the ADX. And so we got to be careful here. Now we're coming back. We've filled the gap. We're coming back to this whole high. It'll be very telling how we react at the 600 area, whether we start to see some fresh new selling based on the fact that we don't have confirmation in MACD yet. MACD has not crossed back above. So how this reacts over the next day or two, I think will tell us a lot if where we correct and then maybe get a little Santa Claus rally. And then we close near the highs of the year, but we're starting to show some signs of weakness. All right. So I would say that's kind of what we're should be, but it wasn't as strong as the up move, but enough to have us a little bit of concern. But if you notice right now, this looks like a retracement rally. We don't have a lot of strength in this rally so far. So I think we have to be conscious if the hourly re-breaks quickly. If we don't get any surge from here and we fail at this high and we kind of we fill the gap and then we start to turn down, then I think that I would feel a little bit more uncomfortable that maybe this wants to pull back a little deeper. And again, it might not turn into a full-fledged sell-off until next year, but it could have the makings of volatility, low momentum confirmation, no momentum confirmation on the weekly and the daily, right? We're just missing the price action, and it really needs to take place on the weekly to confirm something significant. All right, so that's the update for the week. Let me know if you have any questions.
Okay, all right. So let me get back to the charting here. I only have a couple more uh, things to talk about, and then I'm going to talk about the MSTR. I have this video to play. Is it a fraud company or not? I think this will be very interesting, but it's very mathematical. So maybe, yeah, you some people won't like that. But let me pull it up. The chart. Let me go up to the last bits here. A few tickers to go over. Let's see, Mobile Eye. Okay. Yeah, Mobile Eye. Tropes was interested in this stock. Now I see it do its thing. You see that? See that? We're right back at this level where it dropped on earnings in August 2024. It's making us smile. So from $10 to 17. Could it go to 30? I wonder. I wonder what's going to do next year. Definitely. MBLY. Watch that one. Now let's look at some natural gas stocks. Let's see here. So these are the ones I mentioned. Oh, before I get to natural gas, let's look at Deere. Yeah, Deere. Ooh, look at that. So after earnings, it went right to the resistance. $441. Oh man. I have no idea what Trump's going to do for the tariffs with Deere. I know somebody here has been asking me about it. I have no opinion on tariffs at this point. If the company specific tariffs against moving some plants to Mexico, but man, it's been making this attack for a couple years now. I don't know. Is Deere tractors, are this the stock to get into? I wonder. So yeah, I put that on the list of things to watch. We have EE. This is the natural gas stock I was looking at. Yep, $30. Closed 11% on the week. Back at here. Wonder what this is. So EE is a ticker symbol. Pretty easy to remember. What other ones we got? WMB. So WMB, Samantha was talking about that. I showed the video. Also, now 59.65 at the old top of June 14th and June 15th. Dang. So WMB, Williams Corporation. Yeah, so natural gas definitely has a lot of interesting looking charts, right? EQT Corporation also about to hit its resistance from June 2022. $49. Maybe it'll hit it in the coming weeks. We'll see. And ET, I think. Pipelines, I think, right? Yeah, I think there's a pipeline company, natural gas pipeline transfer. So this is the old resistance set in September 2016 to July 2018 before it fell off into COVID, and now it's right back there. $19. So yeah, we have a lot of things to watch. A lot of things to watch. I think there's a lot of stocks making this type of moves. So yeah, I'm going to be watching this. Now, let's look at the cycles. Okay. So we looked at Bitcoin. We looked at that. Let me put on the stupid music. Yeah, you guys can listen to the music while I yap. So let's look at natural gas. I got here some chart here. Let me see. Oh boy. Hopefully, let me close this. Let me see. Hopefully the memory's not gonna die on me. Okay. So this is natural gas. Okay, let me find the cycles for this thing. This daily. Okay, let me see. Get the bottom here. Do some analysis. What kind of bottom? We got 200, 138, 24. Nah. Get the right cycles here. 256. Wait, I don't know. Let's see. Let's see what we got. Yeah, okay. So I think for natural gas, got like a 250-ish cycle. And we have like a smaller 76 day cycle. So right here, we're at this top. So I think if we go by the shorter cycles, seasonality wise, this will be over by mid-December. Okay. But for the long-term cycles, for this 250, we've already been in a downtrend. So this is kind of like the last blow off. Yeah, you usually will see this kind of like blow off, this last one. Like kind of like in 2022, you had this move up into November before it finally fell off. And maybe you kind of had that same thing in January 2023 to 2024 before it fell off again. So I think this last move up from last week will just break down into next week. So I'll have to see. I have to see how this goes. But overall, I don't think natural gas itself, not the natural gas companies I just mentioned, natural gas itself won't start moving up until February. Okay, March. So the bottom will be made around sometime in February, and then March it'll start picking up. So that's kind of my game plan for natural gas. And if we look at the weekly, so this is the weekly one, weekly cycle. Long term is very good. So long term is very good, but short term right now, no. Seasonality wise, no. Natural gas never usually does well over the winter or summer. Once we get into winter and get into summer, it's any kind of bull run at that point is done with. Okay, let's see. Yeah, if you look at the cycles on the weekly chart, you see we still got into probably summer of 2026. Got a lot of time for natural gas. Yeah, we got a lot of time. So don't worry about that. So now we got to look at the companies and see which ones will do well. So if we're going to look at the companies, there's certain ETFs you can look at, like FCG is an ETF, so I can use this to figure out the cycles for the whole sector. So it's like 180 cycles here, days, 180 days for the cycle. Okay, so we're still in an uptrend up until January. So I think, yeah, some of these companies probably will. I think the same thing for oil and gas exploration companies, XOP ETF. I think that's also doing well. If you want to use the leverage, I use Oil U. Okay, Oil U, I use that one, that ETF. Or you can find options for XOP or something like that. So XOP 3X Bull ETF is Oil U. Okay, let me put in chat. Yeah, you can use Oil U, okay? Right there in the chat. Okay. So yeah, it has some, so I think it's similar charts here, similar cycles are given. Now let's look at the weekly. I think I did the weekly, I don't know. Yeah, maybe it's better to do the XOP on the weekly. Let's see what I get. Yeah, this thing takes a lot of memory, huh? No, I don't think so. Okay. We gotta get more data here. Man, that's all they got from up until the great financial crisis. So they don't got much data here, huh? Okay, let's see. So I guess the best time would be March 2026, huh? Yeah, I guess the weekly doesn't have much useful data. I can't tell you the long term on this one. Okay. Well, I guess I'll have to work on this. The XLE probably will be better, but XLE also includes like a lot of stuff that's not oil and gas. I don't know if I want to use this one. Okay. Let's see. Max. At least it goes until 1999. All right. Let's see. What's the... Okay, let me just use this cycle then. Yeah, as far as the weekly cycles, like both of them not very good. Yeah, we'll have to see. I'll have to see. Have to see if the oil and gas. I think a lot of people do not like it. So yeah, it could be trouble. Maybe you won't have much room to grow for oil and gas companies into next year. Yeah, there's not much of a play there. Could be. Probably aligns with what was said in the other video that I played at the beginning about how it's hard to make profit. But yeah, but then again, gas itself, unlike oil, you got a lot of exports, so that might be a lot different from the oil companies. So maybe the oil companies will be not doing so hot. Yeah. There's just not enough history for the FCG. I don't think I can do a good weekly analysis on this one. Oh man, yeah. Unless I make my own index or something. Yeah, this is not enough. Yeah, there's not enough data. Can't do much. So okay, well, we'll see. We'll see with the gas. I don't know. The charts themselves look good. I don't know about the long-term cycles. Long-term cycle for natural gas itself is good. Doesn't mean the companies are going to be good. So that's kind of the problem. I always have a difficulty with the oil and gas companies versus like the commodity price itself. Even though commodity prices are going to go up into next year and maybe the other year after that, it doesn't necessarily mean like there's more room to move for those companies that have already moved up. So we have to see. We'll have to see, man. Okay, now let's go back to MSTR. Okay, MSTR is Michael Saylor's little company that buys Bitcoin. And that's why the stock moves up, because they get loans from issuing bonds. They use their stock to buy more Bitcoin. Their stock price goes up. That makes them issue more bonds. So let's find out how this system works. So this is the last thing I'll play. We're already at 2 hours. Very good time. So this is extra content for you guys.
lots of attention being paid to MicroStrategy these days. I've even had a few comments if I could comment on what's going on, because they are issuing convertible debt to buy Bitcoin, and the price of the stock is going up, thereby putting the bonds, the convertible bonds, into a conversion position and diluting the current shareholders. And I've made the argument that there is no leverage here. There is no leverage, but this is a slide from MicroStrategy's last quarterly earnings showing the impact of intelligent leverage. Can't argue with this slide. And I'm going to show you on the next screen how this is done. Look at this. Total Bitcoin. You're going from December 31st. This is just year to date, first 3 quarters. 33% increase in the total Bitcoin, right? But if we look at their share count, and to their benefit, they're using an assumed diluted share count. The difference between assumed diluted and fully diluted is fully diluted will use the treasury method. Anything that can be converted should be converted. For the assumed diluted share count, they're just saying convert everything. Just ignore everything. Just assume that everything that could be converted is converted. Just convert everything. Now, it is a little bit questionable because every year they have huge amount of stock-based compensation. So this is not forecasting out a couple of years of dilution for free, right? And then because they have share-based compensation. So, but still, let's see what they got here. 13% increase. 13% increase, but a 33% increase in the Bitcoin count. So you would say Bitcoin per share has increased. So if I buy a share, if I bought a share 9 months ago and I buy a share today, never mind what I paid. Let's just look at the asset value that I get. Because the asset count is climbing faster than the share count, the asset value per share is increasing. Isn't that leverage? Isn't that it right there? Let me show you how you get that. You'll be amazed at this. Okay, I'm going to give you just a really simple example, but the logic would be the same no matter what numbers you created. You can prove it for yourself by just creating scenarios on your own, and you'll see that the math always works out. Let's start with a simple example here. Let's say we have a company that has 10 units of something valued at $1. These 10 units. So under assets, we have 10. And we're really only concerned with that. We'll call it some kind of cryptocurrency, let's say. But that's all we're concerned about. And let's say that we have 1,000 shares that are valued at 50 cents a share. There's our initial condition. What we'd like to do is increase our asset count. Let's buy 10 more of these. They're trading at $1 a piece, so we'll have $20 in assets. We've got to buy 10 more. But the business that we run doesn't make any money. Let's say that we have a software business and the software business loses money each year. So we can't really use cash flow from operations to do it. So what we'll do is we'll raise $10 in convertible debt. That's nice and simple. And since each share is 50 cents, we're raising $10, it'll convert to 20 shares. And we raise $10 in convertible debt. We can buy 10 more of these for $1. Our asset value goes to 20. Our asset count went from 10 to 20 because we bought 10 more. We had a 100% increase in our asset count. Let us just fully dilute everything. Let's say, okay, well, it's convertible debt, but it converts to 20 shares. Let's just say on an assumed converted basis, you got 1,020 shares. That is a 2% increase in your share count, right? 100% increase in your asset count. The magic does not stop there. Here we had 10 units of something for 1,000 shares. So each share represented a 1% ownership of each of one unit. If you had a share, you had a 1% ownership of one unit. That's 10 units divided by 1,000 shares. Now you have a 1.9% interest in one unit because we have 20, a count of 20. But only 1,020 shares. So you had a 90% improvement in asset value per share through the use of this convertible debt. a 100% increase in your asset count, a 90% improvement in your asset value per share, a 2% increase in your share count. There is your intelligent leverage. You should keep doing that. Can anybody see where the problem is? What variable are we missing? How is this possible? How can we simply just create value? Where did this happen? That we created this much value, 100% increase in assets, 90% improvement in asset value per share, but only a 2% increase in share count. Wouldn't everybody be doing this if this was possible? Now, the math on the screen is absolutely correct. The slide I showed you from MicroStrategy with their Bitcoin count increasing 33% and they're fully diluted, not even fully diluted. Let's tip our hat to MicroStrategy here. They're saying even if it can't be converted today because it isn't advantageous, let's just convert it anyways. The assumed diluted shares only increased 13%, so that the asset value per share has increased. Look what I've done, 90% improvement, 100% increase, only 2%. Where is the mathematical problem? Everything has to balance. You can't just create stuff out of nothing. Where's the problem? This is what I'm betting. If I have this is what I'm betting you can't figure out. Now this on its own would be, call it illegal on its own. My interpretation of it would be if I was just doing this, it's illegal. But if I wrap it up inside a corporation, and I give you shares, and I give you debt, I give you publicly traded assets such that you can always sell your share to someone else. It does not require new money coming in to pay out old money. That would be a Ponzi scheme. That would be illegal. So where is the problem? Let me show you where it is. It's right here. This $10 coming in represents 20 shares. Let's just deal with the 20 shares. Of these 20 shares, it bought 10 units. So each share has a 50% interest in each unit. But once it gets added to the pool, it now drops to 1.9%. These guys suffer very greatly, but they help out the people who were in there first. So you have the original shareholders who got a 90% increase in the asset value per share, and you have the money coming in that didn't do very well. But all you have to do is just raise more money, and that will help these out and these out, but they won't do very well. Well, you can just raise more money, and that will help them out, but they won't do very well. Well, you just raise more money, and that'll help them out, but they won't do very well. As long as you keep raising money, you can keep improving the asset value per share, but who is financing the improvement in asset value per share? It's always the last person in that is doing that. So if you can issue a lot of equity and a lot of debt and you keep issuing it, you have to keep issuing it in bigger and bigger amounts, however, to keep pushing this up. You have to keep increasing in bigger and bigger amounts. I want you to keep that in mind. Let's revisit this chart again from MicroStrategy. Keep in mind what they're billing it as. They're suggesting that this is the impact of intelligent leverage. And I've just shown you on the previous screen, it has nothing to do with intelligent leverage. It's just a flaw in the math that the people coming in last, those who are supplying the next round of financing, are losing significantly to help those out in front of them. They will increase the asset value per share for those people who were in before them, but they suffer. For them to get an improvement in asset value per share, you got to bring in more money behind you. Let's just see what's going on here. Let's go back to December 31st, 2023. There's your Bitcoin count, 189, 150. I'm not questioning any of their numbers. I'm saying I'm going to give it to them. These numbers are right, and I'll even give it to them for using the assumed diluted shares, not just fully diluted, but convert everything just to show the worst case scenario. Their numbers are right. You're not going to find flaw here. 33%, 189, 150. Let's use their share count. The comma's in the wrong place. It's not the 20 comma, it's 207 comma, 207,640. But I mean, I guess I could give it to them in the sense that, well, they did have a 10-for-1 stock split, so you would move the comma over, right? You got to move it over. That means each share has a 0.091% interest in a Bitcoin. Each share. If you have 189,000 Bitcoin and 207 million shares, each share has a 0.091%. That's a long ways from 1%. That's not 1%, that's 0.091% of a Bitcoin per share. Well, you know, how many shares of MicroStrategy could you buy instead of buying a Bitcoin? If you go back to December 31st, Bitcoin was 42,000, MicroStrategy was 63.19. Again, I'm adjusting for the split, right? It would have been 631, but I'm adjusting for the split. You could buy 668.86 shares. You could have bought a Bitcoin for 42,000, or you could have bought 668 shares of MicroStrategy. It's the same amount of money. If you bought 42,265 of Bitcoin, you own 100% of one Bitcoin. If you spent the same amount of money on MicroStrategy stock, you own 61% of a Bitcoin. Not 100%, but only 61% of a Bitcoin. But that's okay because apparently you have intelligent leverage. Look, 33% and it only was 13%. If we take the 252,000 now and divide it by the new share count, each share is now 0.107% of a Bitcoin. Look at this. You went from 0.091 to 0.107. You had a 17.76% increase in the Bitcoin per share. The asset value per share increased 17.676%. Bitcoin count increased 33, and as long as this increase is less, you will get an increase in the Bitcoin per share. But at whose expense? Remember on the previous screen, it's the last money coming in that helps to pay for all the money in front of it. Let's look at today. Bitcoin, 90,000. Last closing price, 90,000. MicroStrategy closed at $340. So you could buy one Bitcoin for 90,000, or you could buy 266.7 shares of MicroStrategy. Each share representing 0.107 of a Bitcoin, you'd own almost 29% of a Bitcoin. You could have bought 100% of a Bitcoin, but instead you said, no, I'm going to go for 29% of a Bitcoin because, of course, I have intelligent leverage. That leverage only works if MicroStrategy plans to raise more money. And then for those people, that leverage only works if it plans to raise even more money. And then for those people, for it to work out, it must raise even more money. Let's have a look at its share raising or its fundraising strategy. So here it is, their capital raising target, 2025 to 2027. It says illustrative. Their plan is to raise $42 billion in capital over the next 3 years in equal amounts of debt and equity. I'm just going to move a few things around here so that we can see sort of what's going on just a little bit better. So let's just kind of move some things around here. And remember what I said it relies on. Kind of move some things around here. And remember what I said it relies on. You have to keep raising money, and you have to keep raising money in larger and larger increments to get this done. It's the only way to make this happen, right? Give me a second here. I just want to rearrange something, and let's just turn this over on its side like this. There is their fundraising strategy. Is if they do raise this amount of money, they can increase the number of Bitcoin per share that existing shareholders would have at, of course, the cost of these shareholders. But they can make these shareholders okay by raising even more money to help everyone above them. to raise the value of Bitcoin per share. But keep in mind, they're financing 100% of the increment, but only getting a percentage of it. But that's okay. You can raise even more money the next year to help everybody else out in front. Of course, they would suffer quite a bit, but they would help everybody else out in front by raising the Bitcoin per share. And as long as you have a Bitcoin count that is that size and a share count that is that size, any increase in here would look like a large number compared to the increase in here. It would also make it look like you're increasing the asset value per share, but it relies on larger and larger and larger amounts of money coming in. I don't know what I would call that shape. I'm not sure if there's a word for it. It doesn't seem like it mathematically makes sense, because it does rely on an infinite regression into larger and larger amounts. There's a name for this. I don't know what it is. If anybody has an idea of what this is called, I think we've seen this before, but I'm not really sure what it's called. If you wrap it inside an organization that has shares, and shareholders are freely trading the shares, and shareholders are freely buying the equity and freely buying the bonds, and they can trade the equity and the bonds in the market, well, that's not a Ponzi scheme, because you can trade, you don't have to rely on new money coming in to get your money out. But if you're looking at the asset value per share, that can only increase if you have new money coming in and bigger and bigger and bigger amounts of money coming in. I don't know. Do you guys got a name for this thing?
I think that's called a pyramid scheme. Anyway, John Galt shorted MSTR back in the .com days. Maybe he'll short it again and make a killing. Is this the big short?
Hey, yo! Check it out. Here it comes.
Something ain't right, yo.
Watch out, man. Here come that fool. It's packing. Here he comes.
Yo, son, come on. Yo, Omar's coming, man. Oh, shit!
If you can't pay, you better pray. John Galt's coming.
Hey, Stu, your rent's due, motherfucker. And don't be pulling up $40 damn shit on me, you hear? Hey, you conscious?
Yo, I don't want to make your life no harder. I'm just doing my job. Yo. You live here, I work here. I'm doing my job.
All right, guys. Good night. We'll see you on the Turkey Day. Vegas trip for Princess, Ava, and Ruby is coming up tomorrow. I think that'll be pretty exciting. See what happens. Could be fun. Yeah. Yeah, we got. Otherwise, I don't know what's going on for Thanksgiving, if we have any special plans for it on this channel, but we'll see. All right, guys. Later.